Good morning, and welcome to Euroscope Finance, where we break down the world's most important financial stories in just a few minutes. Today, global markets are treading cautiously as the ongoing U.S. government shutdown continues to block the release of crucial economic data. Let's dive into what's driving the markets this Wednesday, November 12th. The tone across global markets remains pretty subdued. Traders are hesitant, mostly because of all the uncertainty coming out of Washington. Since U.S. government agencies can't release their key reports, market volatility isn't being driven by the usual economic data. Instead, it's all about central bank commentary and headline risk. Overnight in Asia, trading was quiet, though some comments from the Federal Reserve, Japan, and Australia did keep investors on edge. The Fed's Vice Chair Barr mentioned that AI is set to transform global economies, but he noted the pace and the outcome could vary widely. At the same time, reports from MNI are suggesting that the Fed might start gradual asset purchases within a few months, which sparked a little bit of buying interest in treasuries. Meanwhile, in Japan, finance official Katayama issued a fresh warning about the currency as the yen approached the 155 level against the dollar, signaling that they might step in to support it. And down in Australia, the central bank debated whether their policy has become too restrictive, which puts some pressure on the Australian dollar. Now, turning to Europe, all eyes are on Germany's CPI and wholesale price index data. This information is key to the European Central Bank's inflation outlook. Despite some recent trends showing inflation is cooling, ECB policymakers are still split. We're expecting Isabel Schnabel to maintain her more aggressive or hawkish stance, while Luis de Guindos will likely sound more cautious and dovish later today. At 10:30, Germany will auction €2.5 billion worth of 21-year and 31-year bonds. These long-duration bonds will be a real test of investor appetite, especially with growing speculation that the ECB might delay any policy tightening and could even extend its easing cycle into mid-2026. Overall, the European morning is expected to be driven by headlines with light trading volumes. As everyone waits for more news from the U.S., in the U.S. session, the focus will be squarely on Federal Reserve commentary. Since economic data is still limited because of the shutdown, we have a whole series of Fed officials scheduled to speak throughout the New York session, including Williams, Paulson, Waller, Bostic, Miran, and Collins. The overall tone is expected to be on the dovish side, reinforcing the growing market belief that the Fed could begin a gradual expansion of its balance sheet. In other words, asset purchases within the next few months. Then, at 18 o'clock, the U.S. Treasury will auction $42 billion in new 10-year notes. This is a key event that could really shape bond yields heading into the close. With liquidity conditions thin and no official data releases, traders should expect some heightened volatility driven by policy headlines and any updates on the shutdown negotiations. As always, the bond markets will be a crucial signal, especially if yields react sharply to any dovish Fed remarks or weak demand at the auction. So, to recap, the U.S. shutdown continues to cloud visibility across global markets. The Fed seems to be leaning toward a more accommodative stance, possibly restarting asset purchases. In Europe, inflation data and ECB rhetoric are the main drivers, and in Asia, currency, intervention risks, and central bank caution are setting the tone. Markets are expected to remain headline sensitive and data light for now, which means every single word from policymakers is going to count. That's all for today's Euroscope Finance Daily Briefing. If you found this update helpful, make sure to like this video, subscribe, and tap the bell for more global market insights. Until next time, stay informed and stay ahead.